Look, everyone chasing returns in this market feels like they're stuck in quicksand. You put your money in, you watch it bounce around like a roller coaster, and you start wondering, how the hell do some strategies keep making money even when the whole market's tanking? That's where market neutral funds come in. And if you're not getting how they pull it off, you're missing the single most powerful weapon in your portfolio. This isn't about luck or guessing which way the wind blows. It's about ripping control back from chaos and building something steady, no matter what the market decides to do. Here's the brutal truth. Most people are betting on the market's direction and hoping for the best. That's the same old story. Bull runs, bear crashes, black swans blindsiding you every time. Market neutral funds don't play that game. They make money by being immune to market swings. Sounds impossible? It's not. You need to stop chasing trends and start mastering balance. Step 1, understand that market neutral means balancing your bets. Long and short are your tools. You're long on what you believe is undervalued, short on what looks overpriced. Your gains don't come from the market booming or busting, but from the difference, capturing the spread while the rest panic. If you've never seen that in action, it feels like sorcery. It's not. It's cold, hard math combined with deep, relentless research. But here's where most founders and investors choke. They don't focus on true neutrality. It's easy to think you're market neutral just because you hold an equal dollar amount long and short. Wrong. You have to dig way deeper. You need to make sure your portfolio's overall beta, the measure of its market risk, is as close to zero as possible. That means adjusting every position constantly like a surgeon operating in real time. If you don't, you're just pretending. The market still controls you. Step 2, obsession with correlation. Your long shares and your short shares can look balanced on the surface, but if they're both tied to the same risk factors, sector, style, momentum, you're getting hit on both sides when those factors move. You must isolate idiosyncratic risk, the specific value locked in individual companies. This requires powerful analytics, constant stress testing, and the guts to cut positions when emotions and the crowd pull you in the wrong direction. Step 3, transparency and speed. Market neutral funds don't have time for bureaucracy or slow decision making. If you're serious, you build systems that show you real-time risk exposure across every trade and factor, every second. Holding your breath hoping the market won't move isn't an option. You fix your risks fast. You rebalance daily or even intraday, and you stay ruthless. If a position drags your neutrality out of alignment, it's gone, no excuses. Step 4, use leverage carefully, but don't get drunk on it. Market neutral by nature involves leverage to amplify the small, steady edges you uncover. The problem is most people don't control that leverage tightly. They over-leverage and get blown out when a sudden market move hits. Control is king. You treat leverage like a power tool, not a toy. When you master leverage clinically, you don't just survive market chaos, you dominate. If you want to make money regardless of market moves, get in the trenches and build this muscle. It's about tech-driven precision, brutal honesty with your positions, and relentless focus on real neutrality, not just a fancy label. Stop assuming markets dictate your fate. Demand control. Demand balance. Demand that your strategy works, day in and day out, rain or shine, boom or bust. No more guessing, no more hoping. Market neutral funds don't play the market's game. They rewrite the rules. And if you're willing to fight that fight, to dig for real edge, to refuse to be a slave to market whims, you stand to build a fortress no storm can breach. So right now, stop chasing easy stories and start mastering the details that nobody else gets right. Focus on the balance sheet of risk, not headlines. Hunt for that true zero exposure. Cut what doesn't neutralize. Control leverage like a pro. Build systems that scream risk instantly. That's how market neutral funds make money regardless. This isn't some fairy tale. It's a war zone. If you're serious about your future, start fighting on the right front. Subscribe to our YouTube channel and visit the featured link to discover more.